It is 11 a.m. and I'd like to call to order the teleconference meeting of the Finance-Auditing Committee of Thursday, February 24th, 2022. Before we begin, please note the meeting is being recorded. And Madam Secretary, can you please call the roll?
Thank you. Welcome back, everyone, starting with Director Cochran.
Here.
Thank you. Director Giudice.
Here.
Director Grosball. Absent. Director Hernandez. Director Hernandez? I see you're connected, but we'll come back to Director Hernandez.
Thank you.
Oh, thank you. There you are. Director Maston.
Present.
Thank you. Vice Chair Parr.
Present.
Chair Rabbit.
Here.
Thank you. And President Tirio.
Here.
Thank you. You have a quorum. And as I mentioned, you are a committee of the whole. Also on the line, we have Directors Garbarino, Hill, Snyder, and Thier. Staff on the line, Dennis Mulligan.
Here.
Joe Wire.
Yes.
Thank you. Ava Bauer-Furbish.
Present.
Thank you. Madeline Chen.
Present.
Thank you. Dave Rivera.
Good morning, I'm here.
Mona Babauta.
Present.
Jim Swindler. It's not on the line. Kelly Hopper.
Present.
Thank you. That confirms staff on the line.
Great, thank you very much. Once again, I want to remind everyone to mute their phones until after the staff's presentations, and remember to unmute when they open it up for director's discussion. After staff's presentation, I'll be asking for any questions, comments, or concerns on the item. If there are any, the Secretary or I will call on you accordingly. After the discussion, we will ask for any public comment before moving on. Please follow along by referring to the page numbers located in the bottom right-hand corner of your meeting packet. And Madam Secretary, can you please introduce the first item?
Thank you, Chair Rabbit. Item number 3 is ratification of previous actions by the Auditor Controller. A packet of commitments, ratification, and investments is before you, begins on page 5. We're excited to welcome back Leslie Murphy on the line to walk us through the PFM investment report for January 2022, and that begins on page 9 for everyone to follow along. Welcome back, Leslie, and go ahead and begin your report.
Thank you. Good morning, everyone. It's great to be back with you all. I am back after a few months' absence due to the birth of my third child, and I must say the fixed income investment landscape is looking a tad different since when I left. Moving on to page 10 of your agenda packet, as we can see in the chart on the top of this page where we're showing the yield on the 2-year U.S. Treasury note over the past year, yields have really surged in recent months in response to rapidly increasing inflation, which has in turn caused the Federal Reserve to recognize that perhaps this high inflation. Can you all still hear me?
Yes, we can.
Yeah, go ahead, Leslie. If you can, mute, please.
Great, thank you. This increasing inflation has caused the Federal Reserve to recognize that perhaps this isn't exactly transitory after all, and that they may need to act more quickly and more decisively in removing monetary policy accommodation. So what the markets are really responding to are increasing expectations of Fed rate hikes over the course of 2022 and beyond. So today we will talk a lot about the Federal Reserve, or the Fed, and what the members of the Fed are saying and thinking about the future path of interest rates, because essentially all the yields on all short-term, high-quality fixed income securities like we can buy in your portfolio, those are really tied to changes in the Fed funds target rate. So what the Fed says and what it does is enormously impactful in terms of the yields available on what we can buy for you and the future earnings potential in your portfolio. So why is the Fed looking to make changes to its monetary policy stance? Well, as we know, the Fed has a dual mandate. Number one is to maintain maximum employment, and on page 11, we can see with the unemployment rate at just 4%, essentially we're there. The second part of the Fed's dual mandate, though, is to maintain stable inflation, and that's what's really kind of gotten away from us in recent months. Moving on to page 12, what we're showing here are changes in CPI, the Consumer Price Index, a widely regarded gauge of inflation. We're looking at changes here year over year. So we can see in January that headline CPI year over year number came in at 7.5%. That is the highest level of inflation that we've seen in 40 years. So even stripping out volatile food and energy prices, core CPI for January came in at 6%. So we're really seeing a double whammy in terms of inflation. On the supply side, we've seen supply chain disruptions and material shortages. Those have really cramped supply, but perhaps more concerning and possibly longer lasting are demand side pressures, which can almost become a self-fulfilling prophecy. So essentially, consumers expect inflation to increase, so they're willing to pay more for goods, and then to offset the higher cost of living, they'll need higher wages. Companies are then increasing wages, and to offset the impact of increasing wages, they're forced to in turn increase their prices. So what we could really see is what's called a wage price spiral. So for its part, the Federal Reserve stands ready to act and ready to do what they can to kind of really dampen that inflation. So looking at page 13, we can see at its most recent meeting on January 26th, the Federal Open Market Committee, so the committee of the Federal Reserve that's responsible for rate setting, they've really acknowledged elevated levels of inflation. And in order to fight that inflation, they've indicated that they think it will soon be appropriate to raise the target range for the Fed funds overnight rate. So markets read soon as to mean that the Fed will be ready to lift off and start increasing rates as soon as next month. Moving on to page 14, there really are two ways for the Fed to remove policy accommodation. Number one is by reducing the size of its almost $9 trillion balance sheet. And number two, the primary method is the one that we've already mentioned, which is increasing the overnight Fed funds target rate. So moving on to page 15, let's take a look at what the market thinks the Fed is going to do. So on the bottom half of this page, we're looking at implied changes to the Fed funds rate. So this is where investors think the Fed funds rate is going to be at a given point in time. So at the end of January, markets were pricing in 5 hikes to that overnight Fed funds rate, which is currently at 0 to 0.25%. Right now, because of some new data that we've gotten in, market participants are expecting up to 6 rate hikes by the Federal Reserve. So moving on to page 16, what does all of this mean for the district's portfolio? Well, for the district and also for all other fixed income investors, when interest rates rise, the impact is going to be twofold. First, we'll see market values decrease. So because some of those older, lower yielding securities in your portfolio aren't looking as valuable to investors who could otherwise go out and buy that exact same bond at a higher yield, you will see a decrease in your market values. But keep in mind that drop in market valuation is unrealized. It wouldn't be realized until or unless we sold a security prior to maturity, but you will see some of those market value swings most likely when you mark your securities to market in your June 30 financials. But secondarily, and perhaps more impactful to the district, is the fact that when interest rates, when yields increase over time, the overall yield and the earnings potential for your portfolio is going to increase as we're able to purchase new securities at higher yields. And we did just that in the month of January. So you can see a lot of purchase activity in January. In total, we purchased about $18 million worth of 3 to 5 year securities. Funds for those purchases were largely taken from LAIF. So you do have a large balance in LAIF. Those funds are fully liquid and able to be deployed into your managed portfolio. So we took advantage of the increases in yields, and particularly in the corporate notes space, we purchased about $6 million worth of high quality corporate notes with yields ranging from 1.8 to 2%. So keep in mind those funds came from LAIF, which was yielding about a 0.2 or 0.25%. So significant increase in yields and thus earnings potential of your portfolio. That's the upshot of increases in interest rates. Moving on to page 18 of your agenda packet, kind of zooming out, taking a look at your overall portfolio, we can see your portfolio is well diversified across sectors. and it is in compliance with both California government code and your investment policy. And I'll say it again, I always kind of leave this thought behind. Even in a rising interest rate environment, which can present both challenges and opportunities, here at PFM, we haven't lost focus of the fact that our number one and our number two priorities are to maintain both the safety and the liquidity of your holdings with us. So with that, I will close my prepared comments, but happy to entertain any questions.
Thank you very much, Leslie. Welcome back, first and foremost, and welcome to your child. I think, as I told my wife when we had our third, we went from man to zone. She didn't get that at the time, but I think after a little bit, it made more sense with my sports analogy. So welcome to your child, and thanks for this report. It is interesting times, and of course, with the news this morning, the impacts of being felt right now worldwide and how long-lasting that will be is going to be interesting as well. With that, I'll look to my colleagues to see if there's any questions, comments, or concerns for Ms. Murphy.
Chair Rabbit, Director Terrio.
Please go ahead.
Just also going to weigh in. Welcome back, Leslie. It's good to hear your voice.
Thank you.
Great. Anyone else have any questions?
Hi, this is Holly. I had a question.
Amaret, can you decipher that? And whoever was first, please go ahead.
I can. Go ahead, Director Thier.
Oh, hi, Leslie. Congratulations on the birth of your child. I just wanted to know, yeah, I just wanted to know if you could talk a little bit about balancing yield when, you know, inflation is rising. If you could talk about that a little bit.
Yeah, that's a good question. And, you know, it certainly is a top of mind concern. So as we're managing your portfolio, we're balancing, you know, the idea of investing longer term at higher yields, but with the knowledge that as rates continue to increase, those securities could be essentially underwater on a market value basis. The good news is that it looks like, unless things change, the balance of the increases in yields have already occurred. So kind of that's one thing to keep in mind. But secondarily, as your portfolio managers are managing your portfolio, they're really looking for opportunities and pockets of value on the yield curve. So where the yield curve is steepest, where we think the increase in yield has a better chance of kind of offsetting those market value fluctuations, that's where we'll make our plays. And if we do think, you know, that we need to rein it in and decrease the duration or the time to maturity of the securities in your portfolio in order to further hedge against swings in market value, we can do that because we do have the authority to actively manage your portfolio.
Thank you.
Was there anyone else with any questions, comments for Leslie?
Director Hernandez had a question, please.
Please go ahead.
Thank you, Mr. Chair. Leslie, welcome back. Congratulations. My question is related to the international developments. Are there any, what kinds of things do we need to be concerned about now or in the short, longer term relative to the recent international developments? Thank you.
Good question. Interestingly enough, what we've seen historically when there are sort of very concerning international developments, like the Russian invasion of Ukraine and what that could do to the markets, typically what we see is what we call an investor flight to quality. So that means investors become very scared of anything viewed as quote unquote risky, and we see investors funnel their money into high quality investments. So for you, that's going to mean you'll see probably an increase in investor demand for things like U.S. Treasuries. So the fact that your portfolio holds a large allocation to Treasuries and agencies will work in your favor because those investments will be in high demand by the market. What we could also see, though, is what's called a widening of spread on the corporate note space, which means investors could start walking away from corporate notes in favor of Treasuries. So your portfolio managers are going to keep that in mind as they're making new purchases, and we will continue to monitor the overall credit worthiness of the corporate notes in your portfolio, and we'll be prepared to act quickly as needed. And I'll give you an example. Historically, you know, when we did see some of those supply chain disruptions in the market, we sort of put a pause on some of our purchases of industrial companies who are more exposed to the supply chain, and we favored for new purchases financials instead. Does that kind of answer your question?
Yes, that does. I suppose I have a follow-up question. And is there standard policy that dictates what you need to, policy as directed by the board that dictates what you do in situations like this, or I imagine we just trust your professional expertise as an alternate?
Yeah, it's really kind of more in the latter. California
Joe should
government
answer.
code.
I think this is Joe Wire. You have an investment policy that PFM is required to follow. And yes, for the most part, the discretionary choices have been provided to PFM to invest the district's resources along that investment policy.
Okay. Thank you very much, Joe and Leslie. And Joe, I'm going to get back to you on that date, so I don't continue to ask these questions in the committee and get them answered directly from you. Thank you so much, everyone.
Great. Anyone else have any questions for Leslie? Not hearing any. I think that concludes our discussion on this item. Before we take our vote, Madam Secretary, is there anyone from the public wishing to speak on item number 3?
We have no speakers on this item.
Great. Well, thank you. Then I'll ask my colleagues for a motion on item 3 to ratify the previous investments, authorize the investments, and accept the investment report.
I'll move the ratification of item number 3.
Second. Thank you, Director. And I have a motion and a second, and I'll ask Madam Secretary to please do a roll call vote.
Thank you. We have a first and a second on item number 3, starting with Director Arnold. Absent. Director Conroy. Absent. Director Garbarino.
Aye.
Director Giudice.
Yes.
Thank you. Director Grossball. Absent. Director Hernandez.
Aye.
Aye. Director Maston.
Aye.
Thank you. Director Melgar. Absent. Director Parr.
Aye.
Aye. Director Rabbit.
Aye.
Director Rodoni. Absent. Director Snyder.
Aye.
Director Stephanie. Absent. Director Thier.
Aye.
Second Vice President Hill.
Aye.
First Vice President Cochran.
Yes.
And President Theriault. Oh, President Theriault just dropped off, so we have 10 ayes.
Great. Thank you very much. The motion does pass, correct?
Correct.
We will continue then to item number 6. Since there are no actions.
Sorry, this is Director Theriault. I went to hit unmute and I hung up by mistake instead. So I'm here to say yes as well. Sorry about that.
Thank you.
Perfect. Thank you very much. So again, we're going to continue on to item number 6 since there are no actions under items 4 or 5. Agenda item 6 is to approve actions relative to the adoption of the pilot program for nonprofit/educational group fairs on Golden Gate Ferry and amend the master ordinance accordingly. The staff report starts on page 25, and our Director of Planning, Ron Downing, is on the line to present this report. Ron, please go ahead.
Good morning, Chair Rabbit and members of the committee. The item that's before you today represents the modification of the fares that the board adopted on November 18th, 2021 to initiate service on the Angel Island Ferry route. We were obviously trying to move very quickly given that Blue and Gold Ferry wanted to eliminate that service, and we adopted the pre-existing Tiburon fare structure for that new Angel Island route. We had a number of comments during the public comment process to establish those fares that the new fares represented a hardship for the youth group from ages 5 to 11, and in particular for school groups and nonprofits that regularly visit Angel Island. We indicated at that time that we would come back to you with a proposed modification of that youth fare to better meet the needs of the community. We researched the item and found that other transit agencies offer discounted nonprofit and educational fares for those type of use. And we looked at the State Park Service. They do have a list of eligible groups that they waive the entrance fee for. So fortunately, we had one bucket, if you will, available in the Clipper fare structure for the limited use paper tickets. And the proposal before you today is to adopt a specific fare for those nonprofit and educational groups with a youth fare of $4.50. That fare would also be available to adults who were chaperoning or accompanying those groups. Wouldn't be fair to penalize the teachers from a school group from the Bayview or something going along with the kids. These do represent a decrease in the fares that we had established. Under the rules of the board, a public hearing is not required to establish these fares. And because of the nature of the Clipper fare structure, we would make these fares available across all of our ferry routes for those K through 12 school groups that are available in any of the 9 Bay Area counties. These fares would also be limited to off-peak ferry direction service. So they would not be available 6 to 9 a.m. southbound and generally 3 to 6 p.m. northbound to minimize capacity constraints on our busiest ferries. So again, the proposal before you is to recommend adoption of these new fares to remedy the comments that we received during the public hearing process last fall and to amend the master ordinance appropriately. The fiscal impact is hard to tell at this point. The Angel Island service is still in its demonstration phase, and we've just only begun to experience some operational experience with it. But these are trips that might not otherwise be made because of concerns over high price. So we'll report back to the board regularly with this new fare, and certainly because we're proposing it as a demonstration project, we would come back to you at a future date to make the fare permanent, do a Title VI analysis, and all of the required things that we have to do. So with that, I'd be happy to answer any questions.
Great. Thank you very much, Ron. It seems very timely, in my opinion, and obviously needed, and it's great to see the kids getting back out there, or hopefully soon back out there on those field trips, especially to Angel Island. Are there any questions, comments, or concerns from directors on item number 6? Not hearing any. I will suppose that concludes our discussion on this item. I think we're all in agreement of moving forward. Madam Secretary, is there anyone from the public wishing to speak on item number 6?
We have no speakers on this item.
Great, thank you. Moving on to our vote, may I have a motion to on item number 6 to approve the establishment of the pilot program for nonprofit educational group fares for Golden Gate Ferry service?
So moved.
And there was a second in there as well, I believe.
Yeah.
And Madam Secretary, did you get that?
I did.
That's perfect. With that, can you read or do the roll call vote, please?
Absolutely. Thank you. We're voting on item number 6 with a first and a second, starting with Director Arnold, who's absent. Director Conroy is also absent. Director Garbarino.
Aye.
Director Giudice.
Yes.
Director Grosball is absent. Director Hernandez.
Aye.
Director Maston.
Aye.
Director Melgar is absent. Director Parr.
Aye.
Director Rabbit.
Aye.
Director Rodoni is absent. Director Snyder.
Aye.
Director Stephanie is absent. Director Thier.
Aye.
Second Vice President Hill.
Yes.
First Vice President Cochran.
Yes.
And President Tirio.
Right button this time, yes.
Thank you. We have 11 ayes.
Great, thank you all. Thank you, Ron. That motion does pass. We'll continue then to item number 7, to approve the renewal of the Marine program. The staff report begins on page 33, and Joe Wire will present this report. Go ahead, Joe.
Thank you very much, and to the committee and the committee of the whole. This is the yearly renewal of the marine insurance program. We have various lines of insurance. Essentially, they cover the district's liability from running the program, also property as in the vessels, and then workers' compensation type cases that are special under the marine law, the Jones Act. The extent of the various coverages remain about the same this year as of last year, so we're rolling over most of the coverage. However, the price is continuing to increase upwards, about 12.7% this time, and that has been going on for several years. Primarily, I'd have to say that marine insurance had been pretty low for a very long time here in our economy, and the district had benefited from that, but that has definitely reversed recently. And one of the biggest reasons is we've lost a number of carriers in the marketplace providing this insurance, and so essentially the demand is outweighing the supply, and that's driving up the prices. We've got a lot of details for the renewals in the report. I'll take a look at the two lines of coverage where we've seen the largest increases, but if you have any questions on any of the rest, when we get to the end, please feel free to ask them. The first one is the protection and indemnity insurance. That's on page 34, and what that covers is essentially your liability risks associated with the operation of the vessels. So, and that is we've always believed is our major liability risk. Something would happen with the vessels, and of course, things have happened over the years. Fortunately, nothing super major. But that is definitely a concern of that. It also covers the workers' compensation under the Jones Act for the crews. Prices have been going up, as I mentioned, across the economy in this area. We moved to this new program last year. Has been successful, but the price is going up by 6.25%, which in this case is about $30,000. In the future years, starting in fact next year, we'll be looking to see if there's anything better. Right now, the market is not showing us any other opportunity outside of this program that we're currently in. But hopefully, new entrants will come into the marketplace in coming years. The next and even more significant price increases come in our excess insurance coverage, and that's covered on the following page, page 35. This accounts for about 70% of the overall price increase for the district this year. It's this excess coverage covers everything beyond the first $1 million that we cover with our marine general liability policy, and this is the unique nature of the marine environment. The previous policy we discussed covers the vessels and their operations. This one covers essentially when passengers say we're disembarking from the vessel and we're moving onto the land. So there's this period of time where they are being covered, and we need to provide coverage for that. They're not covered by the original policy during that time, not covered by our district property insurance or landline coverage, but they are covered by this excess marine liability program. It is expensive for us, several $100,000 for the year. We are required to have this both from good common sense to have some policy for this part of our business, but also in our relationship with the Port of San Francisco. They require us to have about $50 million in excess coverage, which we do under this policy. And we will continue to look next year for a more economical way, but this one is clearly one where we would need more players coming into the marketplace that would hopefully provide the coverage and increase the supply, and then therefore the demand wouldn't be driving the rates up so much. So that's what we're hoping going forward. I want to thank Kelly Vitale for working with the brokers to pull this policy together. She's done a good job doing that. And if there are any other questions about the report, I'm happy to answer them.
Thank you, Joe. Appreciate that. And thanks to Kelly as well. Are there any questions, comments, or concerns for Joe on this item? Again, not hearing any. I think that's indicative of approval, and thanking you for your work. That does conclude the discussion on the item. And before we take our vote, Madam Secretary, is there anyone from the public wishing to speak on this item?
We have no speakers on this item.
Great, thank you. Moving on to the vote then. May I have a motion to on item number 7 to approve the renewal of the marine insurance program?
I'll move the item.
Great. And a second by?
Second.
Second.
Sorry.
Got it.
And once again, Madam Secretary, I know you got that.
I got it.
Can you please do a roll call vote for us?
Thank you. Voting on item number 7, we have a first and second, starting with Director Arnold. Absent. Director Conroy is absent. Director Garbarino.
Aye.
Aye. Director Giudice.
Yes.
Thank you. Director Grosball. Absent. Director Hernandez.
Aye.
Director Maston.
Aye.
Director Melgar. Absent. Director Parr.
Aye.
Director Rabbit.
Aye.
Director Rodoni is absent. Director Snyder.
Aye.
Thank you. Director Stephanie is absent. Director Thier.
Yes.
Thank you. Second Vice President Hill.
Yes.
First Vice President Cochran.
Yes.
And President Thierio.
Yes.
Thank you. You have 11 ayes.
Thank you very much. The motion passes. We'll move on then to agenda item number 8, which is to receive the independent auditor's single audit report for the year ending June 30th, 2021, as submitted by, and I believe I always say this wrong, and is it Edie Bailey or Ide Bailey, LLP? The staff report begins on page 39, and you should have also received the audit report referenced in the staff report. Ahmed Girabay of the company will present this report. Ahmed, thanks for joining us this morning, and please proceed with your report.
Thank you. Good morning, board members. This is the single audit. This is the federal compliance audit report. We previously presented to you the opinion on the financial statements, which was an opinion that the financial statements were fairly stated. I believe that was presented to you back in November. This is a little different. This is the compliance with the federal requirements. The district is a recipient of federal grants, and it actually received quite a bit in common with other transit agencies this year and in the prior year, and you are required to have an audit of the compliance with the requirements of those grants. The requirements is to ensure that the district expended these grants in accordance with the requirements of those grants. It also includes an internal control audit over compliance. And I'm pleased to let you know that the district complied with the requirements of those federal grants, and we issued a clean opinion with respect to those grants. And that's pretty much it. With that, I'll be more than happy to take any questions.
Great. Thank you very much. Thank you for the work. Are there any questions, comments, or concerns on item number 8 from the directors? Once again, not hearing any. That concludes the discussion on this item. We thank you for the work once again. Madam Secretary, is there anyone from the public wishing to speak on item number 8?
We have no speakers for item number 8.
Great. Then moving on to our vote, may I have a motion on item number 8 to receive the independent auditor's single audit report for the year ending June 30th, 2021?
So moved.
And a second by?
Second, sorry, button's a little sticky.
Great. Somewhere in there we have a motion and a second. Madam Secretary, can you please do a roll call vote, please?
Thank you. We are voting on item number 8 with a first and a second, starting with Director Arnold, who's absent. Director Conroy is also absent. Director Garbarino.
Aye.
Director Giudice.
Yes.
Director Grosball is absent. Director Hernandez.
Aye.
Director Maston.
Aye.
Director Melgar is absent. Director Parr.
Aye.
Director Rabbit.
Aye.
Director Rodoni. Absent. Director Snyder.
Aye.
Director Stephanie. Absent. Director Thier.
Aye.
Second Vice President Hill.
Yes.
First Vice President Cochran.
Yes.
And President Tirio.
Yes.
Thank you. You have 11 ayes.
Great, thank you all. That motion passes. We'll move on then to item number 9, which is the status report on the fiscal year 21-22 budget. This staff report starts on page 41, and Joe Wire is going to present this report. Joe, go ahead.
Thank you very much to the committee. This is your monthly report on the status report on this current year's budget. There are little change, and the budget remains balanced with the use of the federal one-time funding. There has been one significant change this time, and if we just turn to page 43, that's the where the table we use every month to track that. And the significant change was actually mentioned by Director Rabbit at the transportation meeting earlier this morning, and it's a program where the region needed to acquire to ensure that we spent all our federal funding on time, but also wanted to hold some funding aside. And so there was a revision to our SDA funding, and that's where they reduced that and then increased our one-time funding. We were showing that on previous months' reports, but in this month we are no longer showing it because it's actually going to occur next fiscal year rather than this fiscal year. So we will be showing it in next fiscal year's report, of course, which would come to you first time in July. So you'll see it then. You also see it in our budget when it comes to you, proposed budget when it comes to you in May. So essentially that changed the lines 2 and 3. 3 went up as in dollar value and 2 went down. But they equal each other out, and the amount is approximately $5.4 million. And they result in the same bottom line, which is the budget is, as I mentioned, still balanced. Alternatively, also line 4, A, B, and C have been updated for the month's activity in our revenues, and those trends continue, and we'll be talking about those in our next report. If there are any questions, I'll have to answer them.
Great. Are there any questions, comments, or concerns for Joe on this item? Again, not hearing any. Madam Secretary, is anyone from the public wishing to speak on this item?
We do. We have one speaker on this item. David Pilpel would like to comment. So in a second, I'm going to connect the line.
Right.
David, are you there?
I am. Can you hear me okay?
We can. Go ahead.
Okay. Sorry. Confusing day. Okay. Sorry I missed the earlier meetings. I had a conflict with redistricting at BART, and I did see former Director Brian Sobel on TV last night. That was nice, although the circumstances were obviously terrible. On the budget, the amount of the ARP carryover, as Joe Wire just explained, is up about $5 million from last month, but that's because of the TDA, STA change. So there's really no significant change in the budget situation from the last month, as I understand it. With about a $75 million operating deficit, could be higher, could be lower for next year. I'm not doing the operating budget. Staff is doing that. 23 million, which is the net of the 28 minus the 5, is about somewhat less than 4 months, putting the fiscal cliff, as I see it, in sometime in mid to late October of 2022, which is only 8 months away. So as the operating budget is being developed, I hope that a new strategic financial plan is also coming that might necessarily involve changes to bridge tolls and transit fares. I would not wait to get started on that in terms of setting a public hearing and getting the public ready for that and messaging and all that, because that's not going to be pleasant, but it may well be necessary. And just finally, so I can make all my comments right here, right now, while bridge traffic and tolls are near recovery projections, transit is not, meaning that there will likely be a much longer transit recovery trajectory, which is unfortunate. I mean, we'll see if people return back to offices in downtown San Francisco and elsewhere quickly. I doubt that. So I suspect that we're going to see unfortunately, a smaller transit system for the foreseeable future. And that's just terribly unfortunate. And I hope that staff is looking at and thinking about creative ways to both bring back the system and bring back the ridership and promote it. I'll leave it at that. Thanks for listening. Appreciate it very much.
Thank you, David. I appreciate that. Madam Secretary, are there any other public speakers?
We have no other speakers.
Great. Well, thank you again. No action is required for this item, so we'll move on then to item number 10. We have the monthly review of the Golden Gate Bridge traffic tolls and bus and ferry transit patronage and fares, and that's on page 51. Joe will also present this item, as well as 11A, which is the monthly statement of revenue and expenses. That's on page 63. And 11B, monthly statement of capital programs and expenditures. That's on page 73. Joe, I'll turn it back over to you.
Thank you very much to the committee, and I will just touch on these. These are status reports, and then if there are any questions, please answer. Please ask them, and I will answer them. If you could just turn to page 53, that's 2 pages farther, and it's the table that we currently use. And just quickly point out, this is through 7 months, and this table measures the traffic on bridge, bus, and ferry, and also the revenue that comes in. So in the Finance Committee, we're primarily focusing on the revenue. We did see a little bit more of a drop in January than we would normally expect, and that was in the bridge traffic, which therefore the bridge revenue. We would expect that had something to do with people's reluctance during the height of the Omicron variant. So we're hoping to see that reverse itself in the next couple of months, and obviously we'll be watching and reporting back to you monthly on that. And then bus and ferry also saw reductions. They were more in line probably with what we would normally see in a January, which tends to be a slower time period. It's cold. Ferry was actually relatively strong, and that could be in some ways from the added service with the Angel Island, which did see a couple of good days, and those make a big difference when you're only carrying about 30,000 people a month. So overall, it's no dramatic changes in that, and we'll keep monitoring that each month. Turning to page 59, that would be the next, and that's where we take a look at the years that have occurred since the pandemic started. And the reason I just want to point this one out this month is this is the first month, January of 2022. So this is the first month where we're adding a 4th year to these graphs. So on page 59, if you take a look at the one that's on the bottom, which is a revenue graph, it has now 3 lines and a dot. That dot will obviously turn into a line when we add another month, February, next month. And then you can see that these represent the years. The top line, the blue one, is the pre-COVID line, and then if you have this on a screen, you see the blue one. Otherwise, it's top line, and then that's 2019, and then 2020 is it has a huge drop, is the revenue for when the pandemic first hit, and it really represents the bottom line. The middle one was, the green one was 2021, where things have gotten better, but of course not what we were back up to what we hoped it would be. And now this dot that's over on the far left-hand side represents January, and you can see it's slightly above where we were last year at this time, and that's good. It's slightly above. Unfortunately, it's still about $3 million a month below where we used to be in the first month of January of 2019 and 2020. And we expect, obviously, that yellow dot or yellow line will stay above last year. Unfortunately, as we've all been talking, it does not look like it's yet ready to travel up to the previous 2019 line. And that's the primary funding source. This is bridge toll revenue, primary funding source for both, of course, the bridge, but also for transit. And so if that line doesn't move back up toward 2019, that will represent our operating shortfall, which we're planning for, of course, in future years. And then in the next few pages, they have the same information for both bus and ferry. And as mentioned by the caller, yes, bus and ferry is substantially less, about a quarter of where it used to be in previous years. And then if we could turn on to page 62, we would talk about or actually the 63, I'm sorry. We'll talk about the financials. and that is item 11A. And just quickly looking at the financials on that first page, page 63, if we go to the bottom of the page, you talk about the consolidated revenues over expenses. And the consolidated revenues over expenses show that in the current year actual is actually $1 million. So in other words, we have $1 million revenue over expenses. And that's good. Of course, that's due to one-time funding. We've recognized about $19 million in one-time funding. So our structural deficit is about $18 million through the first 7 months of the year. That's better than last year. As we mentioned, those earlier charts showed that. Unfortunately, that $18 million could round out the end of the year closer to 40 or more million in the structural deficit, and that's what we would need to make up in future years. Either with increased revenues if we get our ridership patronage back on the bridge, bus and ferry, or reduced services, and that's what we'll be planning for in future year budgets. And then page 73 is your monthly capital report, and just the summary is it shows spending about 45% of budget, which through 7 months is not is pretty much on target. It's not low. It should be, you know, if it was exactly, it'd be closer in the mid-50s% of budget, but 45% is fine, and it seems to be pretty solid across the 4 divisions. With that, I will stop, and any questions on those 3 reports, I'm happy to take them.
Great, thank you, Joe. Appreciate that. Took some scrambling to follow the page numbers and the charts, but was able to do that, and we thank you for that. Are there any questions, comments, or concerns from the directors on items 10, 11A, or 11B?
Chair Rabbit, Director Terrio.
Please go ahead.
Yeah, Joe, I want to thank you in particular for those graphs on pages 59 through 61 comparing the 3 years. Last month's version of those was very useful to me in a discussion I had on Twitter recently, and I'm sure it'll be useful to me in the future as well. So thank you.
You're welcome.
Great. Anyone else have anything for Joe? I think we all echo that, and the thanks, Joe, for putting together as much material as you had so that we can really track where we're at each and every meeting. So thank you for that again. That does conclude our discussion on this item. Before you move on, Madam Secretary, is there anyone from the public wishing to speak on 10, 11A, or 11B?
We have no speakers for those 3 items.
So great. Thank you very much. At this time, we'll move on to item number 12 on the agenda, which is actually closed session. Before we do that, I want to thank everyone for being patient during today's meeting. We'll be placing the public on hold for the duration of this item and reconnect the call after closed session. And Madeline's with us today, so Ms. Chun, can you please take us into closed session?
Certainly, Chair Rabbit, members of the committee, we will now convene in closed session in order to review 2 items of existing litigation as noted on the agenda: Lawrence Hardin versus Golden Gate Bridge Highway and Transportation District, and Philip White versus Golden Gate Bridge Highway and Transportation District.
Great, thank you very much. And our Madam Secretary?
Give me 1 second. I'm going to place the public line on hold and also stop the recording.
Great.
All right, we are back in open session.
Great, thank you very much. I'm going to ask District Council to please provide our closed session report.
Certainly, Chair Rabbit. So the board convened, or the committee convened in closed session as permitted by the Brown Act in order to review 2 matters for direction, and appropriate instructions were given regarding the disposition of Lawrence Hardin versus Golden Gate Bridge Highway and Transportation District, and Philip White versus Golden Gate Bridge Highway and Transportation District. And that concludes the closed session report.
Thank you, Madeline. Appreciate that very much. Madam Secretary, is there anyone from the public wishing to address this committee under item 13, public comment?
We have no more speakers today.
With that, I think we have reached the end of our agenda. May I have a motion to adjourn the meeting?
So moved.
Also move.
And I believe that there was a second in there as well. So hearing no objections, this concludes the meeting of the Finance Auditing Committee. Thank you, everyone. Thank you, staff, as always. Thank you, colleagues. The time is 11:56 a.m.